Hello, property navigators. Thinking about investing in Melbourne? Because there's one local government area you can't afford to overlook in 2026 and beyond. It's called Casey City. This is one of Victoria's largest, fastest growing and most strategically important LGAs. Why? Because Casey is a market being shaped by big forces: population growth, supply pipelines, planning policies, infrastructure pressures, employment expansion, and shifts in housing diversity. Today we're going deep and we're breaking all of this info down so you understand how this key LGA in Greater Melbourne is evolving. Let's go! Suburbs and geography. The city of Casey is located around 40 kilometres south of Melbourne's CBD and is Victoria's largest and fastest growing LGA. It's the dominant growth area for Melbourne's southeast and ranks as the third fastest growing council in Australia, behind only the Gold Coast and Brisbane City Councils. Casey spans 396 square kilometres across 29 suburbs and localities. It has 5 distinct geographic regions that stretch from the foothills of the Dandenong Ranges to the coastal villages of Western Port Bay, and then through to the more concentrated urban development in the northern parts of the region. Its diversity is unmatched. It's a mix of established areas like Berwick, Warren, Hampton Park and Cranbourne, booming growth hubs like Clyde and Clyde North, and quieter, lower density or coastal spots like Blind Bight, Cannons Creek and Warneet. This variety means Casey offers a huge range of land uses, housing styles and buyer profiles. So you can't treat Casey as if it's just one big market, because it's not. From an investment perspective, Casey is made up of older, established suburban pockets with stronger owner-occupier appeal, expansive master-planned estates still under development, strategic health and education precincts, industrial pockets and employment hubs, and coastal and environmentally sensitive areas where development is more limited. Strategically, Casey plays a critical role in Greater Melbourne as a major family-friendly growth and housing delivery corridor. It's where people move for more space, newer homes and more affordable options than what's available in Melbourne's inner and middle ring suburbs. In many ways, Casey has been Greater Melbourne's housing release valve, meeting the city's growing demand for practical, family-friendly living. This has been attracting first home buyers, families upgrading to larger homes, migrant households, and anyone who wants to stay in metropolitan Melbourne but needs more affordable and spacious housing. Casey is, without a doubt, a commuter-friendly, family-oriented growth LGA with a critical role in shaping Melbourne's future. Property market history, 2021 to now. Let's look at how this property market has evolved over the past 5 years. We'll explore the key drivers behind its transformation, covering population growth, property price trends, rental market shifts, and supply levels. Population growth. If there's one statistic that defines Casey's story, it's population. In 2016, Casey's estimated residential population was just under 313,000. By 2021, it had surged to almost 370,000. By 2024, it had surpassed 413,000. Now, at the start of 2026, it's estimated to have over 444,000 residents, making it the largest LGA in Victoria by population size. That is a massive increase in a decade. And this growth isn't random. It's been structurally driven by Melbourne's outward expansion and families needing somewhere to go, housing affordability pressures, and ongoing changes in household formation. Property prices. Typical house prices have jumped from 641,000 in 2021 to around 895,000 now in the second quarter 2026. But there are still quality properties available in that $700,000 to $800,000 price range. Like much of Victoria, that jump in pricing hasn't been in a straight line. October 2022 through to December 2024 saw patchy periods where house values stagnated. They fell and then grew and then fell again, basically leveling out over the period. In October 2022, the typical house price was around $806,000, and it didn't budge over that until February of 2025, when prices started steadily rising again from around that $808,000 mark. Units, on the other hand, didn't have such a long period of stagnation. Instead, they leveled out only for about 6 months between March and August of 2023 before stable growth kicked back in, with typical prices now being around $612,000. Rental market. The vacancy rate has been a bit of a roller coaster over the past 5 years. In early 2021, the vacancy rate was around 2.5%, but by September, it had fallen to just 1.2%, which is considered critically low. By 2022, vacancy had recovered and bounced between 1.7 to 2.5%, but then it plunged back down to around 1.5%, gradually recovering over the next 2 years, almost hitting 4% in late 2025, which is well and truly what's considered a balanced market. But then it fell once again to just under 2% in second quarter of 2026. Rents throughout this period pushed higher, with houses jumping from $383 per week in 2021 to the now $558. But once rents peaked in January 2025, they then stagnated, rising just $14 over the next 15 months. Listings and supply. The number of houses listed for sale peaked in October of 2021, but since then fell sharply. Listings decreased steadily until mid-2024, from which point a much sharper ongoing decrease is evident, since listings have hovered around half the rate we saw in 2021 and 2022. Now, late 2025 and coming into 2026 saw listings fall to the lowest rate in the past 5 years, which is as far back as this data set goes. This lack of supply means inventory levels for both houses and units are super tight at just 1 month. So in any case, you must be quick when buying, because properties right now are selling in an average of 31 days. But check this, in late 2025, houses were selling in a little over 2 weeks, which is bonkers. Property market forecast. In this section, we'll cover where the market is heading, including key trends shaping its future, from explosive population growth to ambitious housing targets and a gradual shift in dwelling types. Population forecast. Looking ahead, Casey's growth story is pretty extraordinary. According to Forecaster ID, Casey's population is projected to surge from 444,500 in 2026 to 614,000 by 2046. That's a staggering 38.1% growth in 20 years. And when you pair those population figures with the forecasted number of future dwellings, the scale of change becomes even clearer. Dwellings are projected to increase from the current 144,500 to nearly 203,000 over the same period. In simple terms, this means a lot more people and a lot more homes. This paints a strong medium and long-term demand story for Casey, but it also raises critical questions like, what kind of future housing will Casey need, and where will all this new housing go? Let's get this answered in the next section. Housing targets. The Victorian government's housing targets make Casey's role as a growth powerhouse undeniable. Casey has the task of delivering 87,000 new dwellings by 2051, split between 58,500 new greenfield homes and 28,500 non-greenfield homes. This massive target is underpinned by what is called the city's 16 precinct structure plans, or its 16 PSP areas. Now, PSPs are developed by the Victorian Planning Authority and provide a comprehensive framework for transitioning land from rural and agricultural uses to urban development, encompassing both residential and employment uses. These plans also guide the delivery of critical infrastructure, including transport networks, recreation spaces, community facilities, and schools, ensuring that new neighbourhoods are well connected and equipped to meet the needs of a growing population. So together, these 16 PSPs cement Casey's position as one of Greater Melbourne's core planned growth fronts, ensuring that Casey remains a key player in delivering housing at scale with a clear roadmap for future development. But here's where this whole plan gets very interesting. While greenfield development will account for around 2/3 of new homes built during this time, 1/3 of the target will come from non-greenfield delivery. This means more infill development in established areas, higher density housing around activity centres, and a gradual shift towards a more diverse and sustainable housing system. In other words, Casey's future isn't just about building more houses in new outer areas of the city, it's about more varied housing in more varied locations. And the scale of this housing pipeline is enormous. Remember, forecast data shows Casey's dwelling stock is expected to reach nearly 203,000 dwellings by 2046. That's an average of 2,919 dwellings built per year. For investors, on one hand, this large-scale supply supports Casey's growth story. On the other, it means this market behaves very differently from more land-constrained parts of Melbourne. Supply is active, planned, and ongoing, which will continue to shape price performance, rental competition, and scarcity dynamics. So the best opportunities may not always lie in the obvious new house and land option. Instead, they're often found in properties that sit slightly outside the bulk supply narrative. Those that are better located, harder to replicate, or more tightly linked to owner-occupier demand. Dwelling types. Casey's housing market is overwhelmingly dominated by detached houses. Data shows 89.6% of dwellings were houses, 10.1% were medium-density homes, and just 0.1% were high-intensity. But the long-term planning direction shows Casey won't stay this way forever. The Victorian government's published housing strategy has a focus on increasing the diversity of its dwelling stock, meaning Casey is gradually shifting towards a more varied housing mix. The city's housing strategy identifies key opportunities for more intensive property development in well-serviced locations such as Warren, where the Fountain Gate Westfield is located, Cranbourne, and the Berwick Health and Education Precinct. This shift is important. It's not about detached houses disappearing, they'll remain dominant. Instead, it's more about varied dwelling types, like townhouses, units, and even some apartment-style developments capturing a larger share of the future demand. For investors, this evolution changes the game. Future demand will increasingly be segmented by factors like household type, age demographics, affordability, transport access, and proximity to services. As the Casey housing market becomes more nuanced, it also becomes more opportunity-rich for investors who understand the details. The key is to look beyond the obvious and identify properties that align with the city's evolving housing needs and demographic shifts. Market drivers and risks. In this section, we'll explore what's driving growth and what challenges lie ahead. We'll cover off the economy, strategic planning, transformative developments, and critical infrastructure upgrades that are creating opportunities. We'll also examine the risks that require careful due diligence. Economy, what keeps the city moving. Casey's gross regional product, or GRP, is estimated at $14.75 billion, contributing 2.53% of Victoria's GRP, a testament to its role as a significant driver of the state's economy. The LGA is home to over 38,000 local businesses and supports an estimated 103,547 local jobs. Its primary industries are healthcare and social assistance, followed by construction, retail, and education. This diversity is key. Casey isn't reliant on a single dominant employer or a highly cyclical industry. This broad economic base gives Casey resilience and stability, making it well equipped to support the rapidly growing population. One of the city's most significant long-term economic anchors is the Berwick Health and Education Precinct, planned as a major employment and activity hub. Why is this important? Because health and education precincts are powerful economic drivers. They create sticky jobs that are less likely to relocate, attract supporting businesses, generate daily activity that fuels the local economy, improve access to essential services, and strengthen housing demand in surrounding areas over the long term. This means Casey's growth story isn't just about more houses. It's about more houses supported by a maturing employment structure. This evolution positions Casey as more than just a suburban growth corridor. It's becoming a complete and sustainable urban environment. Planning scheme. What's important to note here is that the city's planning scheme is scheduled for review right now in 2026. So watch this space, because much of what we have discussed today will be translated into the new planning scheme with updated zoning to support the growth. There's also some very important planned developments underway that further reinforce Casey's long-term growth story. Now, there's a lot of them, so we'll cover just a couple today so you understand what to research further. Firstly, there's the Crosskill Employment Precinct, which is a 317-hectare area that is expected to support 6,800 local jobs and 600 homes. There's also the Casey Fields South and Devon Meadows precinct, which is a significant industrial and employment hub supporting over 5,000 jobs alongside housing and community infrastructure. Now, these developments are transformative because they push Casey beyond simple residential expansion by deepening the local economy and creating diverse employment opportunities to reduce reliance on external job markets, to support more sustainable growth into a more complete urban environment over time. Risks and due diligence. Remember, investing isn't all rainbows and lollipops. Things can go wrong. So if you're thinking about investing in the region, keep in mind, multiple areas of Casey are exposed to flooding and flash flooding, so be sure to look at flood maps. There are also areas near Western Port Bay like Blind Bight that face long-term inundation risks. Be mindful of bushfire-prone land, so check the overlays because this can affect planning and insurances. And lastly, buying the wrong type of property in a market that is set to produce abundant supply can be problematic. We know that around 2/3 of Casey's future supply will come from new development, so be careful of buying in areas that will churn out constant cookie-cutter supply. This includes low-quality builds and poor layouts because all of these factors can limit returns. Remember, average assets stay average, so strong due diligence is always essential. Key takeaways for investors. To bring all of this together, we can see that Casey has solid fundamentals that include strong population growth that will drive demand, relative affordability and accessibility compared to many other parts of metropolitan Melbourne, that it serves genuine family demand, making it a magnet for owner-occupiers, and that it plays a major long-term role in Victoria's housing future, supported by strategic planning and infrastructure investment. In the medium term, this means the outlook is constructive. Casey's demand story is demographic, not speculative. It's projected to keep adding people and households at scale, which should sustain demand for both owner-occupier and rental housing across the region. This steady growth provides a strong foundation for medium-term investment opportunities. In the long term, the city's story is about urban maturity. Casey is evolving from a detached house growth corridor into a more layered and complete urban environment. Over time, it will feature more centres driving local activity, jobs reducing reliance on external employment hubs, housing diversity to meet the needs of a changing population, and internal economic gravity, making it less of a commuter suburb and more of a self-sustaining LGA. This shift is the single most important strategic narrative, positioning it as a maturing urban market with a long-term potential. But if you take only one thing away from this video, let it be this: its growth corridor status alone isn't enough to justify an investment. This is the type of market that where you buy right now matters just as much as what asset you buy. So think about what you are investing in. Is it family owner-occupier demand, future centre-based uplift, proximity to health and education hubs, relative scarcity in a competitive market, or just another product in a pipeline-heavy corridor? Understanding Casey properly means looking beyond the surface level and identifying the specific drivers of value in your investment. That's the difference between average returns and strategic success. Casey is made up of numerous markets. It has complexity, and that complexity is exactly why surface-level analysis won't cut it. Deep research-informed data analysis is critical. If you want help navigating any of this, that's exactly what we do. Book your free discovery chat with Boyd and I by visiting the website or call us absolutely anytime. We'd love to walk you through what the data is saying. If you enjoyed this deep dive, let us know which Victorian LGA you'd like us to explore next in the comments below. And don't forget to like and subscribe. It really helps us push more content out to others that may find it useful. Until next time, happy property navigating.